Welcome back to Trading Hour on CNBC TV 18. Now let's bring on board Chakri Lokpriya from LGT Wealth India, joining us to discuss the market fundamentals and his top sectoral picks. Chakri, good morning. Thank you so much for joining in with us. Let's just start by talking about the defense pack. Railways, defense, that's been the trend last couple of weeks. Seems like it's losing a bit of steam. But for your view coming in here, is it still something that you would look at fundamentally?
Good morning and thanks for having me. If we look at the defense pack and railways, first defense. Now, we've had the India-Pakistan problem at the border, and post which, now the government is ordering an emergency order worth about a fairly big order, and this will benefit a number of defense companies. So that revenue estimate will actually be bumped up for Bharat Electronics, Hindustan Aeronautics, including Mazagon Dock, for multiple reasons. One is, the surface-to-air missiles, drones, all these which were used in the war that we had with Pakistan, those need to be replenished and then ordered some more. So against that backdrop, the revenue and margin outlook for the defense companies, in spite of running up, looks pretty strong. And therefore, we would continue to be holders and maybe incrementally buy into these stocks.
But even at these valuations, Chakri, despite the kind of move that you have seen in a lot of these defense names, some of them were up 30-40% last week.
Excellent question. They have run up. But if you look at the outlook, both domestically as well as new orders are concerned, and plus export orders to Europe, I think both these things have upside estimate risk to the upside potential, and therefore we could buy. But clearly, as you said, that they're not trading at this levels. They're investments worth buying at current levels too.
Okay. Chakri, any specific name you would like to give us in both these spaces, especially defense and railway, that one could still look at right now?
In defense, it will still be, stick to Bharat Electronics, Hindustan Aeronautics. Hindustan Aeronautics supplied drones for the latest India-Pakistan war. And, outside of that, Mazagon Docks as well. Now, if you go to railways, I think, it's a slightly different cup of tea. They're also looking strong. If you look at a company like Titagarh Wagons, it's trading at probably about 19-20 times. Now, post this warlike situation that we had, we are likely to see an increase in railway spending along the northeast border and against, of course, the various parts of India. This will again boost the order book for the railway companies as well. And, the government has the budget. RBI is supposed to release a budget, and this will further help the companies.
Right. Chakri, a lot of these names that are reacting to results today, these electronic component manufacturing companies, say the likes of Dixon, they operate on very thin margins. Even this quarter, the positive was that the margin was 4% or close to 4.5%. At that sort of margin, at that profit, at that kind of market cap it trades in, does it still deserve the valuation premium that it has, especially considering the PLI is going to be phased out next year? The level playing field is going to be equal for all companies. What do you do in a stock like Dixon that has run up so much and now is positioning itself as the premium player in the segment?
Yeah, Dixon is, revenue has reported about 120% up. That's no mean achievement. And second, all the component areas, electronics, LED, TVs, as well as mobile, all these are growth areas. And even if PLI is phased out, still there will be another form of incentive scheme that the government is likely to introduce because, still Indian manufacturing has to pick up in many ways. Yes, these are expensive stocks, but stocks worth buying for the longer term, not for trading. From that perspective, Dixon, yes, for the longer term.
Okay. Chakri, your thoughts coming in on two sectors, that do have exposure to the US, and IT as well as pharma. Is there anything that you like in these names, or are both these avoid, given that there are tariff issues that are going on? IT itself, as of now, large cap companies have not given any sort of a very bullish, positive commentary. So what are we watching out for?
You're absolutely right. The commentary has been kind of uncertain. This is because of the tariff situation. But there is no tariff anyway on services companies. We know that. But the uncertainty is, will it slow down US IT spending. Uh, we will have to wait for another quarter. Meanwhile, the second fear is, will AI take away some of the growth from IT services? Maybe not, actually, because it'll actually prove to be margin accretive over the longer term. So I would incrementally buy into Infosys, TCS, Wipro.
What about auto, Chakri? Because even here, just like pharma, auto is a very broad gamut as a sector. You have two-wheelers, you have four-wheelers, you have tractor manufacturers, you have auto ancillaries. Where do you see yourself placing your bets in, especially considering that the on-ground situation currently is not the best for the industry, be it in terms of the tariff-related concerns or be it the own domestic demand? So where do you position yourself on the auto space?
The auto demand, like as you pointed out, is indeed weak. The first pick of growth was likely to come in the two-wheeler space, TVS Motors, Hero MotoCorp. TVS has done very well. Hero MotoCorp has kind of underperformed. There is valuation comfort. And moreover, second leg of growth, EVs, all these companies are expanding their presence. That will provide another leg of growth. So, so the cyclical uptick in volumes for TVS Motors and Hero MotoCorp, we're likely to see, therefore, will buys. Now, ancillaries, companies like, Minda, Motherson Wiring, these companies are again expanding their product range, will benefit if the tariff talks with the US go well. Their export volumes can kind of improve. But that's more a wait and watch.
Okay. You have any specific thoughts coming in on the metal side as well? There is a lot happening. Hindalco also came out with its numbers. Anything you like there?
If you take Hindalco as, it trades at only about 5 times EV EBITDA, so it's not an expensive stock. The question is about, its outlook, growth outlook. And the growth outlook is kind of going to be subdued until about you have a free trade agreement between USA and Canada, because that's where one of its plants, Hindalco's plants, is located. And on the domestic side, I think largely things are still okay. So net at 5 times EBITDA, valuations are fine, could incrementally buy.
Chakri, pleasure having you as always. Thank you so much for sparing time and joining us today. Chakri Lokpriya there on his view on the markets and specific sectors as well. The Nifty has seen a slight cool off from the highs of the day, now at 24,850, still 170 points higher. So no reason to complain, but there is still some resistance seen at higher levels. Take a short break. We get talking with the management of J Kumar Infra on the other side. Nalin Gupta joins us to discuss the road ahead for the company.